All right, credit unions, what I like to call the untapped resource. A lot of people don't really understand that these type of entities are a great place to find personal or business loans, usually at a smaller amount with either lower interest rates. So if you're concerned that you won't meet the requirements of either credit or financials, a credit union may be a good alternative for you to fulfill your financial needs. All right, so what are credit unions? So the definition states that it's a financial cooperative created by its members and its depositors, borrowers, and shareholders. Operate on a nonprofit basis, credit unions offer many banking services such as consumer and commercial loans, usually at a lower than market interest rates, time deposits, which is also known as a CD, which is a higher than the market interest rates. They also offer credit cards and other guarantees. Credit unions are normally taxed at lower rates than the majority of the different banks and other financial institutions. They're also a type of a mutual association. So how do credit unions work? So credit unions follow a basic business model where the member pools their money. Technically, they're buying shares into a cooperative in order to be able to provide loans, demand deposit accounts, and other financial products and services to each other. So any income generated is used to fund these projects and services that will benefit the community and interest of its members. Credit unions versus banks. So credit unions are significantly smaller in size than most banks and are structured to serve a particular region, industry, or a group. However, because most credit unions have fewer branches does not mean they cannot reach the similar of those big banks. Many credit unions are part of an ATM network designed to expand their reach. If you ever have been a part of a major bank and you use an ATM credit card or a debit card in a different ATM, they typically charge you this $2 to $3 fee. The great thing about credit unions, you can use your ATM card into majority of any other credit union and you won't get charged a fee. So while other credit unions still make enough to cover their operations, the absence that they need to generate profits generally allows the lower fees and account minimums, higher rates and savings, and lower borrowing rates than their members and owners. Believe it or not, they have better customer service. So credit unions are often outperform banks when it comes down to customer service. If you value building a relationship with tellers and loan officers, a credit union or a community bank is the best place to find that experience. Moreover, being able to work with narrow margins allows credit unions to pay higher interest rates on deposits while also charging lower fees for other services such as checking accounts and ATM withdrawals. So in short, a credit union can save members money on loans, accounts, and saving products.